Hello guys, welcome back. It's Topic Kenya, and today we are going to answer the question about financial statements. Financial statement. So as you can see there, we have a question about trial balance and talking about trading profit and loss account. And after you have draw the trading profit and loss account, then you draw the balance sheet as at 31st 12 2003. So we are going to tackle today this question, and make sure you have subscribed and comment. For in case of any question later, comment it, then I will check it back. So thank you. This Topic Kenya. So let's go ahead and answer this question. So the trial balance extracted from the books of Mr. Kamau's business as at 31st 12 2003 is as follows. So motor vehicles, we have the debit and the credit side, and we have those three zeros there are to reduce the numbers of zero in the figures. For example, if you say 3,000, that is in reality it is 3 million, but we use those three zeros there to try and reduce the figures in our trial balance. So good. So motor vehicles is 3,000 in the debit side. Remember, it's an asset. Then we have furniture and fittings 2,000. Then we have the stock as at 1 January 1st 2003. That is an opening stock, which is 1,000. We have sales, which is 10,000. We have purchases, which is 6,000. We have salaries and wages, which is 500. We have rent, which is 500. We have electricity, which is 200. We have stationery, which is 300. We have debtors, which is 1,000. Creditors 2,000. Capital is 2,500. So the closing stock as at 31st 12 2003 amounted to shillings 1.5 million. So required, draw the trading profit and loss account for the year ended 31st 12 2003. Then the second question, draw the balance sheet as at 31st 12 2003. Good. So that is the question, and so this is how we're going to deal it. So first, come up with a table, and remember this is a trading profit account, and it is Mr. Kamau's business. Is Mr. Kamau's business, and we have trading profit and loss account for the year ended we have for the year ended 31st 12 2003. So at that point, after that, make sure you use a ruler to come up with this figure. Remember, you are preparing trading profit and loss account. So you come up with, we have 3, as I usually say, make sure you use a ruler. The examination, for me, I'm trying to show you how everything is going when answering this question. So good, that's our figure, that's our diagram for trading profit and loss account. Now is for us to feed in some figures. Now, so this is it. So first of all, we're going to start with sales. So back to our question. The trial balance extracted from the books of Kamau's business as at 31st 12 2003 is as follows. So as you can see there, our sales on credit side is 10,000. So you come back here, sales, how much? 10,000. 10,000. Now for this question, if for example we had returns inwards, we are going to subtract it from here. Remember, return inwards, there are those goods return back to the business. If for example you are a businessman, then you sell some goods to a customer, if that customer returns some goods, you are going to subtract it from sales, because he or she returned those goods. So since we don't have returns inwards, we are going directly to open stock. And remember, after subtract that return inwards, we will have net sales. So now our net sales will remain to be 10,000. So opening inventory, opening inventory, we are going to have, remember inventory is always in trial balance, so which is 1,000. we're going to place it on this part, because we'll have some figures for adjustment. This is mainly for adjustment. If there's any adjustments, you're going to put it there. So after opening inventory, we're going to purchases, and our purchases, we have 6,000. And remember, if for example the same we have carriage inwards, remember we have carriage inwards and carriage outwards. Carriage inwards is transportation, mainly transportation. For example, carriage in, for example, if you buy as a businessman, if for example you purchase, let's say, sofa sets, then carriage in will be that transportation, so you must add up in purchases because it's an expense too. But since we don't have carriage in, then we're going directly to add up our sum, so whereby we are going to less the closing stock. We're going to less at this part, so it's 6,000. Not even 6,000, so it is 6,000, so this one will be our 6,000. Then we are going to have 7,000, so this will be goods available for sale. Why? Because there was an opening stock and our purchases, so you add up, you sum up both of you sum up, and 7,000 will be the goods available for sale. Then you less closing stock, which is our closing stock, which is 1,500. If you less, you're going to have 50. Let me use my calculator, which is 5,500. Since we have that, so if you less this from sales, because we're going to less up to find out the gross profit. So gross profit will be 10,000 minus 5,500 will be 4,500. That's our gross profit. Then after that, we are going to expenses. If for example there was incomes, we are going to add the incomes from gross profit, but since we don't have income here, we're going to find out our expenses. So our expenses here, we have salaries and wages. Remember, salaries and wages are expenses, so we are going to have 500. Then another expense, we have rent, 500 still. Then we have electricity, 200. Then we have stationery, we have 300. Then we have debtors, debtors, creditors, capital. Yeah, we don't have any other expense, so you're going to sum up this expense, then you subtract it from the income or the gross profit. After that gross profit, you will find out what our net profit. So 500 plus 500, this is 1000, 1200, 1500. So if you subtract this from our income or gross profit, that is we call the gross income. So it is 4500. You subtract. The reason why I'm saying gross income is if you find other incomes, for example discount receive, commission receive, you're going to add up from that gross profit and it will become gross income. So you're going to subtract our profit, our expense from the profit, so that you can find out what profit we made. So for 500 you subtract 1500, this will be 3000. So this will be our net profit, our net profit. And that's how we have tackled that first question, trading profit and loss account. So the next step we are going to answer is draw the balance sheet as at 31st 12 2003. Yeah, so the next question is draw the balance sheet as at 31st 12 2003. Remember, as an accountant we don't always use balance sheet. We say statement of financial position. So you're going to find out statement of financial position. I will recommend always use capital letters in your title. Always use capital letters in your title. So Mr. Kamau's business statement of financial position as at 31st December 2003. Then the same come up with the diagram there. So we have 3 place the same. I remember it is in Kenya shillings. Good. So we are going to start with fixed asset or non-current asset. Fixed assets, starting we have motor vehicles. Motor vehicles we have 3000. Then we have furniture and fittings. Furniture and fittings, which is 2000. Yes, and after that you are going to sum up. So we have 5000 there. Then you're going to current assets. Our current assets, we have stock, and our stock, we are going to use the closing stock here. The closing stock is 1500. I'm going to have 1500. Then after that part, after stock, we have debtors. We have 1000. Do you have any other? No. So we are going to have here 2500. Then let's go to current liabilities. The creditors, our creditors are 2000. I guess that's the only one, creditors. Yeah, at that point we are going to subtract assets from liabilities. So we'll have 500 shillings. Then you're going to sum up here, so you can get 5500. Then after that point we are going to financed by. So we have capital, and our capital, as I can see here, is 2500. So for us to be, what do you call, first to be correct, or the when you find out that finance by, that sum must be equal to 5,500, whereby it's our, what do you call, it's our capital, the working capital. So our capital here will be what, will be, we have been given capital will be 2,500. Then we add net profit. Remember back in our previous net profit, we found it to be 3,000. So if you add this, it must give you 5,500, which is very correct. 3 plus 2, which is 5,500. So we are very correct. So there is no any error from the previous workings. So that's our balance sheet. And if you have any question, make sure you comment and I will get back to you. Thank you guys. It's Topic Kenya, and don't forget to subscribe for another video dealing with accounting. Thank you.